Welcome back. In our last class, we stopped in um trading sessions. Okay, for this class, we're going to be talking about terminologies used in forex. Terminologies used in forex. So now, the first terminology used in forex is um if you see from this picture, you see buy, which you see a bull representing buy, then you see a sell, then you see a bear representing it. In forex, when we say we are going long, and if we are going long, it means what we want to do is to buy, and to buy in forex means to go up. Yes, and that's when to say the price is going up, right? Then if we talk about to go short means we are trying to sell. That's to say the price is going down. The price of a currency or a commodity is going down. That's what a sell means. Now in forex, we represent buys with a bull. With a bull. When we say we are bullish on a currency, it means we are buying. Bulls represent buy. Bulls. Then bears. This bear. When we say we are going short, short means we want to sell. So we use bears to represent or to depict the fact that we want to sell in forex. That's just what it means. So if we say we are going long, we are buying. If we are going short, we are selling. Right? Then if we say when we talk about a bullish market means that the market is buying. The price of either a commodity or a stock or a currency is going up. Like if you can see from this image, when we say bullish, the price short went up. If you see this bull here telling us that the price went up, that's what we mean by a bullish market. But when we say it is a bearish market, it means um that the market is going down. If you say bearish market, bearish market just means that the price of a coin, a commodity or a coin is going down. So that's what bearish means. Bearish just means that the price is dropping, is going down. You understand? That's just what a bearish market represents. A bullish market represents price is going up, price is going high. Bearish market represents price is going down. That's just what it means. Okay? And like I explained before, bulls bulls represents the buyers. That is those who are buying in the market. That is those who are either buying a currency, a coin, or a stock or anything in the market that is traded. So when you talk about the bulls represent buyers. Then when you talk about the bears represents sellers. That is to say people that are selling either a currency or a stock or a bond or anything in the financial market. Yeah. So now, so when we say in forex, when we say a market is ranging, what we mean is that the market doesn't have any particular direction. You know, let's say this is a market now. The market, when we say market is ranging, it's not going in any particular direction. It's not going anywhere. It's just um moving without bearing, no direction. Like I said before, a bearish market. Remember, I said that a bearish market is a market that is going up. We're buying. When we talk about um a bearish market is the market going bearish going down, a bullish market going up. So like I said, for bearish we are going down. That means it has a direction, it's going down. For bullish we are going up, right? Bullish we are going up. Then for a ranging market, a market without direction, it doesn't just have any specific like direction, it's just moving without direction. You understand? That's just what it means. Then when we talk about hawkish, hawkish, he said, it's a term used to refer to central bank governor or personnel of a country. You understand? So when they are hawkish, they tend to be liberal on interest rates and are willing to increase it. This is good news for investors. Then dovish, This is the opposite of hawkish. Um, like I said, for hawkish, they are the central bank governors willing to increase interest rates. But when we talk about dovish, um, the central bank's governor, they are trying to reduce the interest rate, to reduce it. And when they reduce interest rates, it is not a good sign for those that are investors in the country. You understand? That's what it means. Then we have what we call NFP. Which means non NFP means non-farmers payroll, non-farmers payroll. And what NFP represents? NFP takes place on the first Friday of every month. First Friday of every month. It is a data that is brought out by um, the US government that shows how well their economy is doing. It shows statistics of key sectors of their economy, whether their economy is doing well or whether the economy is doing bad. So the name non-farmers payroll, it shows the data of every sector except agricultural sector. That's why they said non-farm. Farm represents farm. So it doesn't show data on farmers, but it shows data on every other aspect of the economy. So now almost everybody that trades currencies or is a major trader of gold or currencies that trade against gold, they always wait for um first Friday of every month because on every NFP day, there is usually high volatility in the market. You understand? The market moves very, very fast. There's always sharp movements, either up or down. Very, very sharp movements in the market. Very, very, very sharp movements. It's not the market, depending on the nature of the news. If the news they bring out um, about the economy is positive, you notice a massive buy that day. That particular Friday, you notice that price of all US currency pairs will be buying massively. They will be buying massively. But if the news they brought out is not in favor of the US economy, if you notice a very, very bearish trend, almost all USD pairs will be selling massively. You understand? So it just gives information about the US economy and in Nigerian time on the first Friday of every month, the report usually comes out on I think around 1:30, 2:30. Around 1:30, 2:30. So that's what it's about NFT and non-farmers payroll. You understand? Then I think I talked about this currency pairs and the name USD, uh, USD JPY, GBP USD, and what's the currencies they trade against. In Forex, we call the pound sterling is called stable. It's just for extra knowledge. It doesn't really matter much. The New Zealand dollar is called Kiwi. Australian dollar is called Aussie. Canadian dollar is called Luni. Then in Forex, we call oil is referred to as black gold. Black gold. Right? Now we have two forms of trading. We have two forms of trading. We have the fundamental analysis and technical analysis. Fundamental analysis and technical analysis. When you talk about fundamental analysis, it means that you are trading based on news, just news alone. That's what fundamental analysis is. And guys that trade fundamental analysis, they usually get some of their news from sites like Forex Factory, Forex Factory, Factory.com, Free.com, Investing.com. Get their news from sites like Investing.com, 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 and some other sites, right? So, like I said before, technical analysis when you are making trades based on just news events. Apart from the non-farmers payroll I talked about, where the US government brings out reports on how the economy is doing on the first Friday of every month. There are also other news or financial reports they bring out different times in a month, sometimes in a week, sometimes in a day. Their central bank brings out news on interest rates, different financial policies being made, and some of these financial policies affect the movement of price in the forex market. So those that usually trade, let's say USD pairs, or pairs that trade against USD, let's say USD JPY, Japanese yen, USD CAD, Canadian dollar, or anything that trades against $30, you need to be updated with news. You understand? With news on what is happening in the US economy, because the central bank can bring out a news now that will just affect the movement of price. You understand? And if you are not someone that is current to the news, you might enter a trade and expect it to go in a particular direction and it goes against you, and you might make losses because you don't have information, the right information. So some of the sites I mentioned, like Forex Factory, investing.com, and some of the sites can get good information on fundamental analysis. Then technical analysis, that is when you are making trades based on technical analysis. Technical in the sense that maybe you are using indicators. So, like I said, in the beginning of this class, so we learn about different indicators such as moving average. We learn about relative strength index, and many other indicators. If you ever traded, you will notice you will see something candles forming, candles, different kind of candles. You understand? So when you are trading based on the movement of those candles, you are doing what we call technical analysis. We learn with time, we learn about what we call support and resistance. We learn about what we call about demand and supply, and so many other things we learn about. So when you are trading based on analysis you are making by yourself, we call it technical analysis. You understand? So that's just it for that one. So like I said, you can get some of the information you need from sites like Forex Factory, Daily FX, and some many other sites. Investing.com, many other sites give you um, all the news you need. You understand? So in the next class, we go fully um, into technical analysis. I'll explain more on technical analysis, then we move forward from there. Thank you.